That was crazy. We were on TV. We looked good too. We looked good over there. All right, I'm ready, Josh. Watch, as soon as we start talking, Chuck will pull in here. When Black Friday comes.
Alright, this works.
I draw up everything I own. And
Why didn't you come that close to no home?
What? Too bad we can't see ourselves. Alright. So yeah, we can knock out, we can knock out some of these topics and then.
Alright, and you can hear me right?
Yeah.
Alright, let's go. Why you put this emoji right? That means I'm happy.
It looks goofy right here though.
Wait, is that? I feel like you have more stuff.
Oh, that doesn't look good. Here, let's fix you. That's live?
No, this is the one I got. Sit down.
Oh, well, you can't even see it good. You can't even see it.
You got some closer. Alright, man, let's start this episode off. Alright, you ready?
Yeah.
Alright, what up, y'all? Welcome to episode 60 of Stock Talk with Josh and
Niko Kritikos.
Niko. What's up, bro? How you been?
Oh, I've been good. Haven't done a podcast in a long time, but that's okay. I'm happy because we got Trump winning the election, we got stocks going up, and everything is good.
No, it ain't been too long as like our usual.
It feels like it's been a while, at least 2 weeks this time, at least.
I think about a month. I think because 1 month is in November. I said late September we did.
Yeah.
So I would say late September. But yeah, cool. We back and better than ever, I guess.
Yep.
Yeah. So there's a lot of big news. You already brought up the election, so we're gonna say that a little bit to the end. We might have a guest show up. So Chuck Poland. I think if you watch the show, but Chuck been like a guest for us like 3 times.
I don't know what that means, but yeah.
And my friend of the show, and also a friend of the station here at WJLB, but let's first get started with this topic. So first topic, this is kind of older news, but the Nike CEO, or former CEO, John Donahue,
Who knows? Donahue.
steps down after the stock is down 24% on the year for reported decline in sales. Soon as he leaves, the stock rose up 9% after hours. And then now, the new guy named Elliot Hill, he's been kind of around for a long time as already a Nike executive.
Okay.
So how you feeling about him
Well,
stepping down Nike?
Well, what I can say is that since Nike has been struggling now, I think they have nothing to lose, right? Put in a different executive and see if he can turn things around, because I feel like ever since Nike came out with that agreement where they were not going to go through Foot Locker anymore, decisions like that have not helped out this company at all.
And I think that, and like the main thing with Nike is their shoes. Like, especially the Jordans releases, the hype has died down a lot.
Yeah.
Like 10, maybe more years ago, people were like dying over Jordans and Mikes and all that.
Yeah.
Now, a lot of the new releases, you can get them whenever. It's like, there's no resale price.
There's no hype to it.
Yeah. So, and so right at the same time, that's when I sold my Nike stuff. So
yeah.
I'm gonna talk about a little bit more how I have been in the selling mood recently, but I bought Nike a couple of months ago when it's like at 82, it dropped down to like in the 70s, and when it rolled back up to 82, 83, I just
So right now, Nike stock is trading at 21 times earnings, which is pretty much the cheapest it's been in 10 years. So this is a great price to be buying Nike stock at.
Yeah, so like I said, I sold it at 82, but I think buying it now around that, what's it, $74, $76 range that it is now, would be a good time to buy it. Because I think Nike should be like $100 and like $110 stock
at least 120. I did.
Yes, so what's that? 75?
75.
Let's say 76.
Yeah, 76. Down 30% on the year and down 15% in the last 5 years. What a bad, if you invested in this in 2021, what a bad investment.
All right, and then you got anything else now?
No, that's it.
Yeah, so the next topic, I said this stuff's kind of old because what I put in like right after
the
last
I
year.
know. That's what I was thinking.
So older news though was the market ended up rallying after the Fed cut rate was announced.
Yeah.
So I know the last episode, what's that, 59?
Mm-hmm.
We talked about Powell dropping the rate cuts and all of that. The market ended up rallying after that.
Yeah.
So my quick question is, how long do you think, well, the entire year, the market has been kind of going up.
Yep.
How long do you think this is gonna last?
Not long. I think the market is due for at least a 10% dip. And on a PE basis, I believe it's trading at almost 30 times earnings, which is historically for the last couple decades, 30 times earnings for the index is extremely rich. The only time we've seen that is a couple of years ago. And what happened a couple of years ago? We had a huge crash and the market came down. So that's what I think is going to happen sometime in the next couple months. We've been lucky. We've gotten a lot of good news. Obviously, investors are really happy about Trump getting elected, and the Fed has been cutting rates, so that's been helping too. But at some point, the sentiment has to die down a little bit, and we kind of have to have a healthy market and let things come back to a healthier valuation.
Can I tell you what I think is gonna happen sometime next year,
What do
2026?
you do? A
Okay.
depression. Let me guess.
Well, not depression.
You
Recession.
always have some extreme.
I do think it's gonna be a recession.
prediction.
I do think it's gonna be a recession.
I don't know about that.
Now, the Fed's been talking about like soft landing a lot, and soft
Yeah.
landing, I'm like, why we need a soft landing?
Well, okay, because they don't want a hard landing. What I watched I watched a video that was talking about so in the past Trump has said that he was like, why did Obama get low interest rates? He pretty much told the Fed that you're making it hard on me because you have higher interest rates, right? So I think Trump's gonna be harder on them now and saying he's gonna tell Jerome Powell like, I want low interest rates, like be more aggressive with the rate cuts so that this economy can start, getting better. And so I think we're gonna see that. Trump's gonna put pressure on the Fed to keep cutting rates, and I think the Fed will do it, really. I think they will do it because, I don't know, I just think,
All depends on how inflation is going.
yes, it does. But, I don't know, the economy and understanding how all that stuff works is so complicated, because there's always a up and down thing to it. There's always one good thing happens and then one bad thing happens. It's very hard to predict how things are gonna play out.
Right about that. Next thing, Uber and Lyft
Oh,
partner with robo taxi companies.
Yes.
So y'all ever seen like Back to the Future, like part 2? Now like how
Yes.
in 2015 all the new stuff we had like,
Oh, yeah.
it looked like it's gonna be like more so 2030, basically.
know. Well, doesn't Back to the Future don't they have flying cars?
Yeah.
Yeah, we're not even close to that yet.
I think maybe 2050, maybe.
Yeah, something like that. So Uber and Lyft they are partnering with companies to allow robo-taxi cars to operate on their network, pretty much, because ever since Tesla came out with that news that now that the self-driving software is ready and they're gonna have robo-taxis, Uber and Lyft has to do something to keep up with that, and so that's why they're doing this. I saw they're partnering with multiple different companies, and so, I mean, Lyft has been struggling. I think Uber has 75% market share in this industry, so, I mean, they both need to keep up though, because by the time Tesla,
Yeah, can they just combine, like, or would that be like a monopoly or whatever?
well, I don't know if they would do that. I feel like they're huge enemies. That would be like Ford and GM combining. I don't know if that
That's
would happen.
different.
Not really.
That's different.
I don't know if that would happen.
It's two different industries, car industry and self-service.
It's two different
customer
industries,
service.
but I'm saying they dominate the industry. Like they're the main two players. Like who else are you gonna use for Uber or Lyft? Like it's just taxis and stuff. Like they're the two big players. And now we have Tesla as a player. I guess you can say Waymo, but I think Waymo is one of the companies that was partnering with Uber anyways. So, I mean, Tesla's gonna be able to allow when you have no driver in the car, you're gonna be able to. It's gonna allow for much cheaper rides.
Facts.
So Tesla's going to drive the price down lower, and they're probably going to take out a lot of the business for Uber and Lyft. And Lyft's already struggling. That's something I talked about in my analysis video last week, is like, how do you become you become the number 2 player, and if you're doing billions of dollars of revenue, how do you still struggle to make a profit? That's what I feel like it's a bad business model if you make $5 billion, but you can't profit $1. So, those are my thoughts on it.
I mean, they do got like a lot of cost. How many people use Uber?
A lot, most people, 75%.
Really?
I think that's the number.
I think I can count on one hand how many times they use Uber.
Oh, not me. There, 76% market share. Lyft has 24. Uber has 149 million active users. You see, so Lyft has been they've been way down.
Yeah.
Lyft's got some work to do.
Yeah, that might be my ignorance, because I can count on one hand how many times I use Uber. It might just be 1 to 20.
Well, I've done, I mean, if you go on vacation or something somewhere, if you go to another city, you don't have a car,
I'll get away.
I've done. Well,
But I don't go on vacation a lot though.
yeah.
Last time I went on vacation was like Disney World, Orlando, had a rental.
Yeah, so I mean, I even tried to factor in like, if you take out the driver, how much money does that save you? And I'm pretty sure
That too.
Uber is paying the drivers, I wanna say roughly half of the money, it's either 40 or 60%, something like that. So, that means your profitability is gonna go up 2x almost. So Tesla's gonna be able to offer rides for almost half the price. And, I don't know, I think,
And a couple years ago, they had some bad press. Uber, I think. Well, Uber a little bit more strong because they got the Uber Eats stuff too. Compared to Lyft, does Lyft do like any type of food thing?
no, I don't think so, no, they don't. So that's what we got for Uber and Lyft. Then,
Yeah, so I have been, like I said recently, just earlier, I've been selling Ubers. I've been selling a lot of stuff.
what have you been selling?
So Nike, I mean, also, so Nike also sold my other stock that I had, GTE, Red Tit. It's kind of like a penny stock, so I'm gonna count that. I made money though.
Okay,
I made some
good,
money on it.
good.
So I've been selling.
Becoming a wiser investor with time.
I know, but yeah, I'm just saying, I've been kind of wanting to sell stuff because I think a market crash.
Yeah.
So that's why I
What
think
makes you
I'm-
think that?
It's just, I think it's just time.
You just feel it?
I just think it's just time.
Yeah.
Like it's just been on too much of a high this past year or something.
Yeah,
Something gotta go down.
yeah, that's right.
That's why I think a recession might be on the way, 2025, 2026.
Well, see, I don't think that's realistic.
I mean,
I think what we went through in
if you ask a lot of
2022
people now, we already in a recession.
Yeah, but that's.
A lot of people in corporate, like think of the tech industry, they basically they've been in a recession this past year. If you think about tech industry and some more industries, they kind of are
Well,
already
sure, but the GDP has to go down for at least 2 quarters for it to be a recession. That's what a depression. That's what a recession is. So we had negative GDP growth in 2020. Since then, we have not. We have not had. We're not in a recession.
So let me ask you something.
We had a recession in 2020. Technically, well, I mean, I guess technically, I guess you could say that. But no, we're actually on the up. From 22 to 23, we had more GDP growth. And I'm telling you, now that the Fed's cutting rates, and that we have Trump in office, this is going to push us up higher.
Let me ask you, Trump in office. Oh, Chuck's here. I'll be right back. Keep talking.
Time out.
You're recording?
Yep.
Did you take a break?
Yeah,
Where, what did you guys?
We'll show you.